Hey guys, Optimus Futures here. Got an educational video. We're going to be looking at the footprint charts, also known as cluster charts on Optimus Flow. We're going to be going through a strategy called absorption. First part of the video, we're going to focus on theory, on why absorption is present in the marketplace. These theories are efficient market hypothesis, auction market theory, and then we're going to be conceptualizing the different types of market participants that are most active and most relevant for absorption. The strategy itself, we're going to go through some of the characteristics, some checklists, some things to look out for, and then we're going to run through a number of examples of the absorption strategy on the S&P 500 futures, the E-mini, the ES. So I hope you enjoy the video. Okay, so before we get into some of the theory on why absorption happens in the marketplace, or what the underlying causes of absorption, we need to just prime you for what absorption is. So it's an area where a large amount of contracts are both bought and sold, but without the underlying price movement that you would expect with such heavy volume. So it's quite literally the market absorbing heavy amount of volume without price moving in one direction or another. People look at this or call it stuffing, when a candle stuffs, also known as a false breakout. These are all the same thing. This is what absorption is. This is the market absorbing a lot of activity. So in essence, it's really a reversal strategy. We're looking for the absorption to occur, price to reverse, and then either get short or long in the opposite direction. So if you're going to be running a strategy using the footprint charts or the cluster charts, any strategy really in the market, you want some sort of logic behind it. You want some sort of theory, some sort of fundamental theory that helps you conceptualize and make sense of what's happening and why this works. One of the theories, it's not particularly applicable, but it is important to understand, is the efficient market hypothesis. And this posits that all current information is baked in to the underlying price. So finding price below or above fair value is impossible because every second that the market is open or functioning, that is fair value of where price is at that particular moment. It also says that the market is generally efficient. It's efficient at facilitating trade between buyers and sellers. And if that's true, it's going to go towards and gravitate towards places where the heaviest buying and selling can take place, i.e. the most amount of trades. And so if the market is efficient in finding buyers and sellers and two-sided trade to occur, it's going to go towards prices where that two-sided trade can occur. And that's kind of important when we're thinking of absorption and why absorption works. So the next theory that's important when we're talking and thinking about absorption is auction theory. Auction theory underpins a lot of the action that occurs in the marketplace day in, day out. So that is that the market functions like an auction, almost like your cartoonish idea of what an auction is, how an auction starts, how it ends. So an auction ends and price reverses when there's only one bidder left in the room. So if you're at an auction and there's two-way bidding happening between two parties, price stops moving up when only one bidder is left in the room. And that second bidder has said, no, prices are too high for me right now. I'm taking myself out of this running. So the job of the auctioneer is to find price that will facilitate the most amount of interest and activity. And in this sort of example, or in this sort of conceptualization, the auctioneer is the marketplace. So if you're an auctioneer and you're starting bidding, you're going to place the opening price at what you think isn't too high where no bids will occur and isn't too low where an enormous amount of bids will occur. You're trying to find where that fair value is. And the market participants' role in this auctioning process, they're the ones that will inevitably decide if price is below or above fair value. So the final point that I'll make about auction theory is that time, it's relative. And so if we're thinking about the auctioning process in the marketplace and how it's consistently ongoing, we need to consider that there are multiple time frames interacting with each other at all times. So there's 1 minute time frame interacting with a 5 minute time frame. There's 5 minute time frame participants interacting with 4 hour time frame participants, and so on and so forth. So considering that there are auctions within auctions, there are 1 minute auctions, there are 10-second auctions, there are 5 minute auctions. So it's important to understand that there's auctions going on within. So that's a pretty complicated discussion, but it's something to consider. So the last piece of theory, I'll call it, that we should understand when we're thinking about absorption is the different type of market participants that are active. So not all market participants are created equal and will have more of an effect on the auctioning process that's occurring in the market. So if, going back to the last slide, if you have an extremely wealthy bidder at an auction, he has much more purchasing power than others at the same auction. So that sort of bidder will have more weight and will be calmer generally and will have more buying power, essentially. So for simplicity's sake, it's best to consider these sort of market participants into two categories: the strong versus the weak, or the higher time frame versus the lower time frame. So when we're thinking about the marketplace, it's important to think that there are participants in the marketplace that are stronger, that have more purchasing power, that are calmer, and there are market participants that are in the market that are shakier, don't have as much purchasing power, are feeling pressure in certain ways. So there are emotions occurring in the marketplace and in the auctioning process as it unfolds. And that's important to consider when we're talking about absorption. So along with our concept of strong versus weak market participants, we should also be looking at the buying and selling that's occurring in the marketplace as either initiative buying, responsive buying, or initiative selling, or responsive selling. Okay? So initiative, that's when price is pushing away from our current concept of fair value. So that's when there's a breakout occurring at a strong resistance level, and there's continual buying and prices moving away from value. That's initiative buying that's occurring in the marketplace. Responsive, an example of responsive buying is when price is drifting lower and lower from fair value, and buyers then step up. They're responding to the lower prices that are occurring. Okay, so that's the theory portion of this video kind of concluded. Now we're going to go into some of the characteristics, some things to watch out for, and then we're going to really show some examples from the last few weeks in the S&P futures of absorption and what it looks like. So absorption, the characteristics, it's always responsive in nature. Like I was just discussing in the last slide, there's initiative buying and selling, and then there's responsive buying and selling. Absorption is always responsive in nature because it's when price has come up into a support or resistance area. It's away from our current understanding of where fair value is, and it's when either responsive buyers or sellers step in and shove price back into fair value. It's essentially a rejection of a breakout away from value. So it's a result of auction theory as well as the efficient market. It's price not moving, but large amounts of contracts being traded at a specific price. It's typically at the high or the low of a day, and it's always at a key technical level or a key technical breakpoint. That's very important for this strategy. If you don't have an understanding of support and resistance, then this strategy is not going to be very fruitful for you. You really need to get a strong grasp of support and resistance to run this strategy, because that's where absorption occurs, at those key levels. So for this video, I'm going to assume everybody has a basic understanding of cluster charts, or also known as footprint charts, what they mean, what all these numbers mean, what the red numbers mean, what the blue numbers mean, etc., and so forth. And I'm going to assume everybody has also a general understanding of candlestick charts. So I found a pretty good example here from the last week. This is the October 21st, 2022. This is a 15-minute chart we're looking at. So I found a decent example of absorption. So what we're looking at and some of the characteristics that we have here is we have a clear support area bottomed here on the 18th at 3:15 in the morning, bottomed here, double bottom again on the 18th at 12:15, and so we're coming over to the next day, bottomed again 10:45 on the 21st, bounced off there, and now we're underneath this area in which the market has rejected multiple times. Okay, so this is our area of our current understanding of where fair value is, or where most of trade is being facilitated. And so when it gets under this area, now we're switching over to the cluster charts, and we're going to look at order flow, and we're going to look at what's occurring underneath this area. And as we can see, it popped down, and a large amount of sellers, initiative sellers, stepped in and tried to continue to sell into this move, tried to continue this move down. But what happened was these sellers, they got stuffed, they got rejected. There was a market participant that was larger, that was absorbing all this selling pressure, and immediately rejected price and brought it back up into what our concept, our current understanding of what fair value is. And it resumed, went up, and went sideways from here, and eventually did continue its move higher. So that's a great example of absorption, of a larger, calmer, higher time frame participant in the auctioning process in the market, stepping in below fair value, responding to those prices and pushing it higher. Excuse this is just loading up the volume here. So I found another example of absorption on the ES. This is from the 9th of October, 2022. And it's going to look a lot similar to the last one. Whether it's to the buy side or the sell side, it's the same thing. This is to the buy side again. Same thing. This is our current understanding of where fair value is. We have a really strong rejection off this area on the 8th at 230, 235. Strong reversal, V-shaped reversal here. And the next time price comes over here, we almost touch it and get another rejection. So now that we're back underneath this area, this is where we want to come in to order flow, come into the footprint, also known as the cluster charts, and really get a good look at what's happening. So this is all the action above. And now once we're under this area, under this really key area of support and resistance, so this is support, we're looking at order flow. And what we see here is we dip under and we get strong selling by likely a weaker market participant that comes in and tries to sell this breakout or this breakdown. And they're selling quite aggressively, but there's a stronger market participant that is sitting here absorbing this sort of energy and this sort of breakout. It's absorbing this breakout, and it's pushing price right back into our understanding of fair value, pushing it right back up. It does eventually break down, but we get a nice move from here back up. All right, that's from 3794 to 3816. That's a decent move. You're never going to catch it all, but that's not so bad. So that's really all the time I have for you folks today. We could go through a bunch more examples, but these two, more than enough. They're all going to look very similar. Like I said, whether it's to the buy side or the sell side, we're going to see an increase in volume. We're going to see our understanding of fair value. We got our understanding of market participants, auction theory. It's all going to come together, and it's all going to play out in the market. Very similar, whether it's the ES, whether it's gold, NASDAQ, whatever. It's the same process throughout any underlying or any marketplace. So I hope you enjoyed this video. I hope you can learn something. If you want to check out our platform, it's Optimus Flow. It has all these features for free for our customers. So please come and check us out, and have a good day.